Now, in Friday's video, we talked a lot about sentiment, and in today's video, I kind of wanted to follow through with that and talk about an area of the market that has faced extreme pessimism over the last 2 years and some of the worst price action to go along with it, and that would be Chinese internet stocks. Now, part of the reason for that has to do with the concern between the U.S. and China relations, and things actually got so ugly for a while there was talk and thought that there was potential for ADRs to be delisted out of the U.S. market. And that has sent this area into a tailspin, and what I've got up on the screen right now is KWEB, which is the ETF of the Chinese internet stocks, and from last February at its maximum, it had a negative 80% down draw, and right now it's down about 72% from its highs last February. Now, this ETF's only been around since 2014, but you can see these are the lowest prices in almost a decade. Now, something happened over the weekend that could potentially change the thought process and sentiment in this area, and that was Didi, which was under investigations from Chinese regulators along with a couple of other firms. Market chatter is that the investigation is going to be lifted and that ban is going to be lifted as well. And Didi, now I'm zoomed in on an hourly chart, closed Friday at about $1.86, and it is currently up to $3.12, about 70% higher than it was on Friday. For the rest of this video, I want to take a look at some of the larger names in this space. We'll take a look at JD, Baba, BIDU, and Tencent, see where they're trading at, and see if we can find any areas of support and resistance on these charts, areas to watch moving forward. Let's start with Tencent. All right, Tencent's actually held up better than some of the other names that we just talked about. If we go back here, we can see a big level of support at 40. That is where we pushed down to during 2020. Those are the 2020 lows. It held, and we made that move all the way up, and then we've come all the way back and back tested it. Right, a move underneath the 40 really opens this thing up for potential more downside. The lows from 2018-19 are around that 30 zone. So if we break underneath 40, that's the next area of the chart that we'd be looking at. However, what we can see has happened here is we have a wedge being built. We have lower highs, but we have higher lows. And so we are really looking at the potential for a move one way or the other here as this volatility has kind of dried up. Prices have started to get tighter and tighter and tighter, and so we're watching to see who the winner of this is going to be. Now, we've got this wedge forming again at that area of support, so it gives some credence that we could see that potential move to the upside. Now, as always, it's got to prove it to us before we can say with any certainty one way or the other, but what we're really paying attention to from a ceiling standpoint is this major 54 level. That is the zone that we tested multiple times from the top last year before breaking down this year. So if this wedge pattern breaks, we get above 46, 48 in that zone, look for that price action to come back into that 54 level, and move above that would kind of open things up for more move to the upside. But those are the two levels that we're really paying attention to there. Now, next up, I want to take a look at JD. JD is another one that's held up very well in comparison to a lot of the space. You can see it's well off of the lows from a few years ago. You can see its 2020 lows were all the way back down here at 30, and we had a low this year of 40. And if we take a look kind of at our previous area of resistance where we got our big breakout from, it's right here just underneath 50. We did have a 1 or 2 days where we traded underneath of that during that really big washout there in March, but it was able to get back up above that. And so we also have that same type of pattern where we have higher lows and lower highs being put in. So we're building a wedge right around that major area of 50 support, and we're really paying attention to see what is going on here. So we'll zoom in a little bit better so you guys can get a little bit clearer picture, but you can clearly see we put in those higher lows, those lower highs. The major level in here is going to be that clean close over that 60 zone all the way up to 64. All right, so we get a move back up over this zone that opens us to get back up towards the highs of the years where our next resistance is at that 76 level. Next up, I want to take a look at BIDU. Back this chart up here. Now, BIDU, you can see, has fallen, did fall all the way back almost to the 2020 lows, but still held above it, so stronger than the space as a whole. And these two lines I just put on the chart, if I extend them out to the left, you're going to see the importance of this price zone going all the way back to 2014, and then the breakout that happened all the way back in 2011. So this 100 to 85 zone is major long-term support, and that is the area that held here on this pullback earlier this year. Now, we do not have a series of higher lows in place. We actually have the same low in place from this test right there at that 100 zone. So there's the potential for maybe a double bottom. We do still have that series of lower highs, right? And that goes back quite some time, right? This is clearly in that downtrend still. And we're really looking for that move to make a set of higher highs. And we would need to take out 160 to 170 zone to negate these highs that were in play from earlier this year. If we were to get back up here, we then would have this potential setup, and that does look a lot better. There is a lot of resistance right here at this zone going back again over the last year or so, and a move over 180 really gives us the ability to start attacking these previous highs from the previous year. So again, a very important zone, and we're certainly watching that closely. Last but not least, we'll take a look at Alibaba. And we can see we did come out way below the 2020 lows. I'm going to put the 2020 lows in on this chart. That is right here, and you can see massive underperformance out of Alibaba in comparison to the other charts that we just took a look at. We almost traded all the way back down to all-time lows from its IPO, and that's all the way back down at about 57. The low from this year was right around 72. And you can see the long-term major area of support is right here in this zone, and this goes all the way back to 2015 and 2016. All right, so we're paying very close attention to what happens here at this spot. And like the first three that we looked at, we have our series of lower highs, but we also have a series of higher lows being put in as well. So we tested that support zone, made that big bounce, came back, started to put in a higher low, and have started to move up a little bit. Zooming in here, you can clearly see once again, we have that wedge being built right on that major area of support, with the potential for sentiment to be changing here, and this is the reason why we're watching this space. The keys on Baba, really, we need to get back up over that 130 to 140 zone. That's that major level, and then the huge level is to get back up over the 2020 lows in at 170 to 180 right in here in this zone. So there is a lot for this area of the market to prove, but it's trading at an interesting level with interesting news that's just come out, and it's certainly worth paying attention to this space, which has been left for dead for quite some time. As always, I hope you guys found this content useful. If you got any questions, feel free to reach out to me at mtedeschi@perspectivewealthplanning.com. You can give me a call at 814-580-9881. Have a great start to the week, guys. I'll see you all tomorrow.